Hi, I'm Nicholas Schneider here with another update on LNG shipping markets. In today's video, we'll review what happened in 2015 and share our view on the outlook for the year ahead in 2016. In 2015, global LNG trade increased largely as a result of new export projects in the Asia-Pacific region. The startup of the Donghae Sonora project in Indonesia and the startup of the Australia Pacific and Gladstone project in Australia contributed to new LNG exports in the second half of 2015. However, due to weak demand growth in the first half of 2015, global LNG trade last year was only about 3% higher than 2014. While imports increased strongly in Europe, this was largely offset by weaker demand in Japan and Korea, largely as a result of mild weather and increased competition from other energy sources such as coal and nuclear. While LNG trade grew by about 3% last year, the LNG fleet grew by about 7%, with 26 new LNG vessels delivering in the year. As a result, short-term charter rates fell to around $30,000 per day by mid-2015 and have largely remained there since. Looking ahead to 2016, we don't expect LNG fleet utilization or short-term rates to increase significantly from current levels within the year. There are 7 new export projects scheduled to start up or ramp up within the year, and this includes several large export projects in Australia, as well as the first export project from the US at Sabine Pass, and the world's very first LNG production vessel in Malaysia for Petronas. In total, these projects will contribute about 60 million tons per year of new LNG export supply capacity. However, only a portion of this capacity is set to come online in 2016, and due to delays at some projects, we expect LNG trade will grow by only about 25 million tons per year in 2016. The growth of LNG trade in 2016 will likely be the largest annual increase since 2010. However, the LNG fleet is also scheduled to grow strongly this year. There are roughly 40 vessels scheduled to deliver in 2016, and while most of these vessels are committed to long-term projects, the overall growth of the LNG fleet should keep fleet utilization and short-term rates from recovering much from current levels within this year. Although 2016 will remain a challenging year, the long-term demand for clean-burning fossil fuels will support the growth of the LNG industry. In their recent view to 2040, ExxonMobil forecasts that roughly 40% of global energy demand to 2040 will be met by natural gas. And this will result in LNG trade roughly tripling by 2040, with an increase to roughly 750 million tons per year in 2040. In summary, LNG trade will increase strongly over the next few years with the startup of new LNG export projects. And while the LNG fleet will increase strongly this year, orders for new LNG vessels have fallen to very low levels. In fact, there have been no new orders for LNG vessels since October of 2015. Therefore, fleet utilization and short-term rates will gradually recover after 2016 as the growth of LNG trade gradually reduces the current surplus of LNG vessels on the market. Thank you very much for watching, and we'll be back next quarter with another update.